Good morning and welcome to today's 5 with Fitz. Looks like the markets want to claw higher in the early going, and I think that's great. I had hoped that we'd see some momentum into earnings after last week, which was, of course, the strongest since June, but that was not to be, at least not yet anyway. Here's my playbook. 1. This week's action plan. James Bond will probably give a boost to AMC, but the real key to my way of thinking is that people are getting out, and I like that. JP Morgan is Wednesday, which will tell us a lot about the state of money. The company traditionally puts out great numbers, but I'm expecting a squiggle, then I'm going to try to do some buying if I can. I don't own shares, well, let me rephrase that. I don't own enough shares anyway. And oil at $82 a barrel, there's an outside chance in my mind it's going to hit $100 a barrel, which is going to catch a lot of people by surprise. It makes me wonder about the supply chain costs and Christmas shopping. Oh, and by the way, I still am not going to touch Facebook with a 10-foot pole. 2. The biggest bargain on Wall Street. Microsoft, pure and simple. The company just boosted prices on Office 365, is expanding on all sorts of AI-related undertakings, medicine, pay and advanced cloud space, plus it's just rolled out Windows 11, and yet it has not encountered even a whiff of pushback from customers. Tells me the time is right and the price is right. Shares have recovered nicely from recent lows, and I think it's on track for sharply higher numbers 12 months from now. How say $400 a share grab you? I like it. Point number 3, how to play Apple's earnings. Apple is known for a massive run-up into earnings, which is something we'd normally play. This time around, though, the stock is down nearly 10% ahead of time despite business conditions accelerating. Forget the App Store fears everybody else is worried about. That's a non-issue. What you want to focus on is that revenue and growth may be up 35% and 70% or more respectively if I'm correct. The run may not be immediate, but buying now could be a super opportunity. Point number 4, here's one way to think about big data. The FAA, yep, those guys, just finished a 4-year trial of new software that routes airport taxiways more efficiently, resulting in a staggering 275,000 gallons of fuel saved and delays cut by 916 hours on the tarmac. That sounds pretty good to me. They're now going to deploy it across bigger airports like Atlanta, San Francisco, Los Angeles, and more in an optimizing air travel strategy. If this isn't the perfect example of how big data analysis can have real-world applications, I don't know what is. And you know what? I'm willing to bet one of my favorite data analysis firms is behind this. Point number 5, better late than never. The SEC is apparently finally starting to investigate Archegos for potential market manipulation, nearly 7 months after that firm's implosion rocked the markets. According to the SEC, Archegos may have purchased multiple stakes in the same companies across several banks to avoid having to divulge the moves publicly. Now, this is a big-time party foul, and it's easy to understand why the SEC is on edge. If they missed this one, it begs the question, what else have the regulators missed at a time when payment for order flow, naked shorting, and other allegations are swirling? Justifiably, in my mind. Today's bottom line, you can't have different results if you're investing like everybody else. Yeah, exactly. You got this, I promise. Now, as always, let's get out there and make the week rock. There's profits, grab your share. I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.